Don't miss these under $15 stocks. 8 times to 100 times potential returns. Hey everyone, are you tired of hearing about the same old stocks? Apple this, Tesla that? Well, today, we're diving deep into the world of under $15 stocks, those hidden gems that could potentially turn a small investment into a life-changing amount of money. Now, I'm not saying these are guaranteed winners, but we're going to be looking at 3 companies with the potential to see some serious growth in the coming years. Think of it like this. Every stock is either a mansion or a money pit, and it's our job to figure out which one it is before we invest our hard-earned money. So grab your coffee, buckle up, and let's get caffeinated. The Honest Company, trading under the ticker symbol HNST, has been making waves in the market recently. Now you might know them for their eco-friendly baby products, which have become a staple for many environmentally conscious parents. But this company is so much more than just diapers and wipes. They offer a wide range of products from personal care items to household cleaning supplies, all designed with sustainability in mind. We're talking about a potential 8 times to 10 times return from today's price of just $4.40. This kind of growth is not something you see every day. I know what you're thinking. A company co-founded by Jessica Alba. Is this a joke? But it's not. Jessica Alba has been deeply involved in the company's mission and vision since its inception. But listen, this company has been putting in the work, and their financials are starting to reflect that. They've been making strategic moves to improve their profitability and market position. They've gone from an F-grade income statement to a B+ in just a short amount of time, and that's something to pay attention to. This kind of turnaround is rare and indicates strong management and a solid business model. Imagine this. The Honest Company continues to grow its market share in the sustainable product space. As more consumers become environmentally conscious, the demand for their products is likely to increase. They expand their product line, reaching new demographics and solidifying their brand loyalty. This expansion could include new categories like organic food or sustainable fashion, further diversifying their revenue streams. Their online presence explodes, driving sales through the roof. With the rise of e-commerce, their direct-to-consumer model could see significant growth, especially if they leverage social media and influencer marketing effectively. Suddenly, those $4.40 shares are worth $35, maybe even $44 each. This kind of return could make early investors very happy. That's the power of investing in a company with a solid turnaround story and a massive potential market. The Honest Company has positioned itself well to capitalize on the growing trend towards sustainability. But remember, this is just one possible scenario. Investing always comes with risks, and it's important to do your own research and consider all factors before making a decision. We'll be diving deeper into their financials, analyzing their management team, and assessing the competitive landscape to get a clearer picture of their true potential. Stay tuned as we uncover more about the Honest Company's journey from diapers to millions. SoFi Technologies ticker symbol. SoFi, trading at around $13 a share, has been making waves in the financial world. This company, which started as a student loan refinancing platform, has evolved into a comprehensive financial services provider. Now, SoFi isn't just another banking app. It's a revolutionary platform that's changing the way we think about personal finance. It's a one-stop shop for all things personal finance, offering a seamless experience that integrates various financial services into one user-friendly app. We're talking loans, investments, banking, you name it, they've got it. Whether you're looking to refinance your student loans, invest in the stock market, or simply manage your day-to-day banking needs, SoFi has you covered. And that's what makes this company so exciting. The ability to offer such a wide range of services under one roof is not just convenient for users, but it also positions SoFi as a formidable player in the financial industry. They're not just competing in one market, they're disrupting the entire financial industry. By leveraging cutting-edge technology and innovative solutions, SoFi is setting new standards for what a financial services company can be. Imagine a world where your banking, investing, and loan needs are all met seamlessly through one platform. No more juggling multiple apps or dealing with different financial institutions. No more jumping between different apps and websites. No more confusing fees and interest rates. SoFi aims to simplify your financial life, making it easier to manage your money and achieve your financial goals. That's the future that SoFi is building, and it's a future that could potentially bring investors massive returns. With their innovative approach and commitment to customer satisfaction, SoFi is poised to become a leader in the financial industry. We're talking about a potential 10 times to 100 times return on your investment. Imagine the possibilities if SoFi continues to grow and expand its services. That's right, from $13 to $130, maybe even $1,300 a share. These are bold predictions, but they're not without merit. Now I know what you're thinking. Those are some bold predictions, caffeinated money. And you're right, they are. But when you consider the company's track record and the potential for growth in the financial technology sector, these predictions start to seem more plausible. And you're right, they are. But when you look at the massive market opportunity, the company's impressive growth rate, and their commitment to innovation, it's not hard to see why SoFi has the potential to become a financial giant. But when you look at the massive market opportunity, the company's impressive growth rate, and their commitment to innovation, it's not hard to see why SoFi has the potential to become a financial giant. The financial services market is vast, and SoFi is well positioned to capture a significant share of it. It's not hard to see why SoFi has the potential to become a financial giant. But as always, we're going to be digging deeper, analyzing their financials, assessing their competitive landscape, and evaluating their management team to see if they can truly live up to the hype. But as always, we're going to be digging deeper, analyzing their financials, assessing their competitive landscape, and evaluating their management team to see if they can truly live up to the hype. Stay tuned as we explore what makes SoFi a potential game changer in the world of finance. Fubo TV, the future of sports streaming. Finally, let's talk about Fubo TV, ticker symbol FUBO, a company looking to revolutionize the way we watch sports. In a world where traditional cable packages are becoming increasingly obsolete, Fubo TV is stepping up to offer a more flexible, user-friendly alternative. Imagine being able to catch your favorite games, whether it's football, basketball, or even niche sports, all in one place without the hassle of a cable subscription. Trading at a mere $2.70 per share, Fubo TV is a sports-focused streaming platform that's taking on the giants like ESPN and traditional cable packages. Despite its relatively low stock price, the company has shown promising growth and resilience in a highly competitive market. Their unique selling proposition lies in their dedication to sports content, which sets them apart from other streaming services that offer a more generalized selection of entertainment. And while they're still in the early innings, their recent performance and future potential have us feeling bullish. The company has been making strategic moves to expand its content offerings and improve its technology, ensuring a seamless viewing experience for its users. This forward-thinking approach has caught the attention of investors who are optimistic about the company's long-term prospects. Their income statement has been steadily improving, and they're projected to be profitable by 2025. This is a significant milestone for any company, especially one in the competitive streaming industry. The path to profitability is often fraught with challenges, but Fubo TV's consistent financial performance suggests that they are on the right track. But what's really got us excited is their potential for growth. The streaming market is expanding rapidly, and Fubo TV is well positioned to capitalize on this trend. With more people cutting the cord and looking for alternative ways to watch their favorite sports, the demand for services like Fubo TV is only going to increase. Imagine a world where you can watch any sporting event, live or on demand, without the need for expensive cable subscriptions. This is the vision that Fubo TV is working towards, and it's a vision that resonates with a growing number of sports fans. The convenience and affordability of streaming make it an attractive option for anyone looking to enjoy their favorite sports without breaking the bank. That's the future that Fubo TV is building, and it's a future that could be incredibly lucrative for early investors. By getting in on the ground floor, investors have the opportunity to benefit from the company's growth and success. As Fubo TV continues to expand its offerings and attract more subscribers, the potential for significant returns becomes increasingly likely. And here's the kicker: rumors are swirling about a potential deal with Walt Disney, which could give Fubo TV access to ESPN's massive library of sports content. Such a partnership would be a game changer, providing Fubo TV with a wealth of high-quality content that would attract even more subscribers. The synergy between the two companies could create a powerhouse in the sports streaming market. Talk about a game changer. This potential deal could catapult Fubo TV to new heights, making it a formidable player in the streaming industry. The excitement surrounding this possibility has already generated a buzz among investors and sports fans alike. On top of that, they're rolling out a skinny bundle offering, giving users a more affordable way to access their favorite sports channels. This move is designed to attract budget-conscious consumers who are looking for value without compromising on quality. By offering a variety of subscription options, Fubo TV is making it easier for everyone to enjoy their favorite sports. Now, I know what you're thinking. Can they really compete with the big boys? It's a valid question given the dominance of established players like ESPN and traditional cable providers. However, Fubo TV's unique focus on sports and its innovative approach to streaming give it a competitive edge. And that's the million-dollar question. The streaming landscape is constantly evolving, and only time will tell if Fubo TV can maintain its momentum and achieve long-term success. However, the company's current trajectory and strategic initiatives suggest that they are well equipped to navigate the challenges ahead. But with a laser focus on sports streaming, a growing subscriber base, and the potential for game-changing partnerships, Fubo TV has all the ingredients for a massive success story. Their commitment to delivering high-quality sports content and their innovative approach to streaming make them a company to watch in the coming years. Whether you're a sports fan or an investor, Fubo TV offers something exciting for everyone. Don't miss out your next big investment. So there you have it, 3 under $15 stocks with the potential to generate some serious returns. The Honest Company, capitalizing on the booming sustainable product market. SoFi Technologies, disrupting the entire financial industry with its all-in-one platform. And Fubo TV, aiming to become the go-to destination for sports streaming. But remember, this is just a starting point. Always do your own research, consult with a financial advisor, and never invest more than you can afford to lose. The stock market is full of opportunities, but it's important to approach it with caution and a healthy dose of skepticism. If you enjoyed this video and want to see more stock analysis like this, don't forget to hit that subscribe button and ring the notification bell so you don't miss out on our future videos. Until next time, happy investing.